the second part of this chapter deals with standard cost accounting. And a standard is the cost or the quantity that it is expected to take to produce one unit. Let me say that again. The standard is the price, cost, or quantity it takes to produce one unit under normal conditions. And the accounting department would help come up with the cost standards after consulting with other divisions. So if we were coming up with the cost standard for our direct materials, let's use crayons. Let's pretend that we're manufacturing crayons because that's the example that they use throughout the chapter. The cost standard for our direct materials would be what we think what is our estimate for direct materials to produce one batch of crayons. So how much is the direct materials going to cost to produce one batch of crayons? And we would have to, the accounting department would have to consult with the purchasing manager to come up with that cost standard. And they would consider the purchase price as well as any discounts or delivery fees. The cost standards for direct labor, the accounting department would have to consult with human resource managers on that, and that would the factors to be considered would be your wage scale based on experience requirements. Do you need an experienced labor force to produce these crayons? That may increase the cost of your direct labor. Also, payroll taxes or fringe benefits. So all of our product cost, direct material, direct labor, and manufacturing overhead, they're going to have cost standards, what we think it will cost to produce one unit of output. They're also going to have efficiency standards. And that is how much input we think is going to be needed. So if we're producing those crayons, the cost standards is how much does our direct material cost to produce one batch of crayons? How much direct labor is going to cost to produce one batch of crayons? Our efficiency standards is how much direct materials are we going to need to produce one batch of crayons? So, for instance, how many pounds of wax does it take to produce the crayons? Or how many direct labor hours does it take to produce the crayons? That would be your efficiency standards for direct material and direct labor. The accounting department would help create those efficiency standards after consulting with the production managers and the engineers to see what either the time requirements it's going to take for your employee to produce it, or how much wax does it normally take to produce it, considering the spoilage that you may have. You can also develop these standards for manufacturing overhead, but we're going to concentrate on direct materials and direct labor for our purposes. So this is giving you an example of the cost standard cost calculations for your direct materials and direct labor. How much is it going to cost to produce one batch of crayons? Well, we have our purchase price net of discounts. So this is how much we pay per pound of wax. And then we also have some delivery fees. So our standard cost, we expect to pay per pound under normal conditions is $1.75. That's our standard under normal conditions. And for direct labor, after consulting with our human resources department, we've developed this standard. We expect each direct labor hour to cost $12 an hour. Again, we're not going to focus on the overhead. We're only going to focus on direct material and direct labor standards. And those are cost standards, but we're also going to have efficiency standards. So, and that would be how much wax. The cost is how much does each pound of wax cost, or how much does each direct labor hour cost. But the efficiency is how much of these do we need. So how many pounds of wax do we need per batch of crayons? How many direct labor hours is it going to take to produce a batch of crayons? And that would be your efficiency standard, or sometimes it's called usage or quantity standards. And it's a measure of how much input is going to be needed to produce the product. We're going to use the standards that we develop after we consult with the other departments. We're going to use these standards to calculate variances. We're going to calculate a cost variance and an efficiency variance. The cost variance measures how well we're doing at keeping our direct material cost and our direct labor cost within our standards. In other words, did we pay more or did we pay less than we expected to with our standard? And the efficiency variance is going to measure how well we're using our direct materials and how well we're using our human resources. In other words, did we have to use more direct materials or direct labor hours than we thought we were going to have to, or did we use less efficiency? Were we efficient with our direct labor hours? Were we efficient with our materials, or was there waste? And both of those, the cost variance and the efficiency variance, are part of the flexible budget variance. And that last problem that we did, that problem 23-25A, where we computed the flexible budget variance, we actually did the flexible budget performance report where we calculated the flexible budget variance and the sales volume variance. Well, we identified areas that may have had favorable or unfavorable variances, but we didn't know whether that was because we paid too much or paid too little, or whether we used too much or too little. And the cost variance and the efficiency variance will tell us that. It will break that flexible budget variance down so that we know whether we paid too much for direct materials or did we use too much direct materials. That's an example. We'll see when we actually plug in some real numbers how this works. So let's look at an example. Oh, and before I do that, the standard cost, what we develop, our standard cost and our efficiency standards, they're going to be useful for us as we create our master budget. And also when we create our flexible budget, we use the standards that we develop to calculate what our cost would be on the master budget and in our flexible budget. So these standards are very helpful in the budgeting process. They also identify like target ranges for production managers. So they help identify set performance goals. Managers would also use the standards that the accountants help create to set selling prices. So they're useful in variance analysis, but they're also useful in other areas of the business, setting these standards. And then standards would be updated at least on a yearly basis, because you would want your standard to be current, to be up to date, because prices change, right? So the standards may change too. So this is, once you go through the process of creating standards with the accountant would talk to all these people to help set the standards, but that would be needed to be updated on a regular basis, at least annually, because these cost standards could very easily change. And the standards are used to create the variances, so you would want accurate standards. Alright, so now we're ready to look at this is the flexible budget variance out of the textbook. So it's that we looked at the flexible budget performance report is on page 1227. And in that flexible budget performance report, we identified some flexible budget variances, and this just pulls some of those out. Specifically, we're going to look at this direct materials, 13,000 unfavorable, and direct labor, 10,400 favorable. Flexible budget variance. We're going to break this down into the cost variance and the efficiency variance so we can see why we had this $13,000 unfavorable variance here. For example, for direct materials. Did our direct materials just cost a lot more per pound of wax than we had thought they would? Or did we just waste a lot of direct materials during the production process? And we'll be able to see that once we break this down into the cost and the efficiency variance. So that's where we're going. You can, where's my formulas? Okay, you can use these formulas to calculate your cost variance or your efficiency variance. You can set it up into 3 columns like this, where you take your actual cost times your actual quantity, and then your standard cost times your actual quantity, and the difference between those two numbers would be your cost variance. Then you could do, take the number you calculated here and compare it to your standard cost times your standard quantity allowed, and take the difference, and that would give you your efficiency variance. So you can do it in the 3-column approach. I like to just do the formulas. Whoops, not that. So here's one of the formulas, the cost variance. I just memorize that when you're calculating the cost variance, you can memorize this formula: actual cost minus standard cost times actual quantity. And the efficiency variance is actual quantity minus standard quantity multiplied by standard cost. So if it's easier for you just to memorize this formula and the formula for cost variance, or if you want to memorize the 3 columns, where is that? These 3 columns to calculate your cost variance and efficiency variance. Whichever way is easiest for you, it's fine with me. You're going to come up with the same amount. I like to do just the formula instead of the 3 columns. But okay, now back to this. We're gonna break this direct material variance down into the direct material cost variance and the direct material efficiency variance to see why we had a $13,000 unfavorable flexible budget variance. Okay, direct material. This example comes straight out of your textbook on page 1234. Our direct materials cost standards is $1.75 per pound of wax. Direct material efficiency standard is 1 pound of wax per batch. So it should take us 1 pound of paraffin to make a batch of crayons, and it should cost $1.75 per pound of wax. Those are our standards. Now let's see what it actually took. Our actual amount of the wax used was 65,000 pounds. We actually paid $104,000 for that wax. We made 52,000 batches of crayons. So let's compute our cost variance and our efficiency variance. I have the formulas here. So the actual cost that we paid for this wax, it doesn't give us a per pound amount, so we have to calculate the per pound amount by ourselves. So you take what you paid, 104,000, divided by 65,000 pounds, and that will give you the per pound amount. 104,000 divided by 65,000 pounds, and that tells us that we paid $1.60 per pound. So that's our actual cost, $1.60 per pound. Our standard cost, what we expected under normal circumstances to pay, was $1.75 a pound. So we paid less than what we thought we would. Okay, and we multiplied that difference by our actual quantity. Our actual quantity, how much we actually used, 65,000 pounds. And this tells us that our cost variance, direct material cost variance, 9,750. Now our variances are always either favorable or unfavorable. They're favorable if they increase operating income, unfavorable if they decrease operating income. Well, here our actual costs were a lot less than what we had planned to pay. We paid $1.60 a pound. Our actual cost is $1.60 a pound. We had budgeted, we thought we would, our standard was $1.75. So we expected to pay $1.75. We paid a lot less than that. So when our expenses are lower, our operating income's higher. So this is a favorable variance. Now, let's look at our efficiency variance. The formula for that is actual quantity minus standard quantity times our standard cost. And you may want to write that out until you become familiar with that. Actual quantity. How many was 65,000 pounds? That's what we actually used. We're going to subtract our standard quantity. Our efficiency standard was 1 pound per batch. 1 pound per batch. It should have taken us 1 pound for every batch of crayons. We made 52 batches, so our standard for the amount that we actually made is 52,000. Your standard quantity has to be adjusted for how many units you actually made. So our pound, it was 1 pound per unit per batch, and we made 52 batches of crayons. So we should have used 52,000 pounds, but we actually used a lot more. We used 65,000 pounds. So we take that and multiply the standard cost. The standard cost is $1.75. So our efficiency variance is 22,750. We've got to think, is this favorable or unfavorable? Well, our actual quantity, we used a lot more wax than we planned to use, or that we should have used. We used a lot more, so that would have increased our expenses. So this is unfavorable. Okay, so that is our direct material cost variance and our direct material efficiency variance. You can also, I like to do it the way I did it, or you can do it in the 3-column approach where you take actual cost times actual quantity, and you'll come up with this $104,000. Then you take your standard cost times your actual quantity, come up with a dollar amount there, and then your standard cost times your standard quantity. Compare these numbers, and that's where you'll get your cost variance and your efficiency variance. It's exactly the same numbers I got. So it's just however you prefer to work the problem, whatever makes whatever is the easiest method for you to memorize. And these numbers together explain why our direct material variance was $13,000 unfavorable. That's what we were doing. We were trying to explain why we had $13,000 of direct materials variance that was unfavorable. Did we use too much materials, or did we pay too much for our materials? Why did we have this $13,000 unfavorable variance for direct materials? Well, we paid, our cost was good. We just used a lot more than we were supposed to use. And notice if you net these amounts out, if you take the $22,750 minus the $975, you'll get an overall $13,000 unfavorable variance, and that's what we were trying to explain. So we used 13,000 pounds more than we thought we were, or that we thought we should need to. So a manager would want to look at both of these variances. Our cost variance is favorable, but the managers would want to know why. They would need to go to the purchasing department and ask, why did we pay a lot less for this wax than we thought we would pay? Maybe we bought inferior wax. That ended up a lot of it being wasted. So just because you have a favorable number doesn't necessarily mean that's a good thing for the company. That may explain why the production wasted so much wax. This may have been inferior, inventory. So the managers would want to discuss this variance with the purchasers to see if they negotiated a good price, or did they get some kind of inferior wax that caused problems on the production side. They would also want to discuss this variance, the efficiency variance, with the production manager to see what happened. Why did we use 13,000 pounds more than we thought we were going to use? Were our workers wasting material, or did our equipment malfunction that messed up a lot of the wax, or did we just get a lower quality wax that caused problems in our production line? Now let's look, that's the direct material variance. The formulas are the same for the direct labor variances, the cost and efficiency. So let's look back at our flexible budget. Our flexible budget showed our direct labor cost were $10,400 less than what we thought we were going to have. So we had $10,400 favorable direct labor variance, and we want to explain that. Was our cost a lot lower for our direct labor? Did we pay lower wages? Was the cost lower? Or did we just use a lot less hours of direct labor? Was our usage down to create this favorable variance? And once we break that flexible budget variance down into the cost variance and the efficiency variance, we'll be able to explain why we had this $10,400 favorable variance. All right. So our standards are given to us in the book on page 1236. Our direct labor cost standard is $12 per direct labor hour. Our efficiency standard, we expect each batch of crayons to take 15 minutes to make, 0.25 of direct labor hour. Our actual amount of direct labor hours that we used 10,400 direct labor hours, and our actual cost of direct labor hours were 150,000. And this was to make 52,000 batches of crayons. All right, so we've got to determine our cost variance and our efficiency variance. Our actual cost, that is not given to us per direct labor hour, so we have to calculate it. It's 145,000 divided by 10,400, and that gives us $14 per hour. We actually paid our workers $14 an hour. That's our actual cost. Our standard cost was $12 an hour. Ooh. We paid our workers $2 more an hour than what we thought we should for our standards. Our actual quantity, 10,400. How many labor hours do we use actually? Okay, and that will give us our cost variance of 20,800. Now we have to decide if this is favorable or unfavorable. Well, we paid $2 more an hour than we thought we should, so that's going to increase our cost, which will lower our operating income. So it's unfavorable. We paid more than we had anticipated, so it's unfavorable. All right, let's do our efficiency variance. Our actual quantity, how many labor hours do we use? 10,400. We're going to subtract our standard quantity. So how much should we have used to make 52,000 batches of crayons? How many labor hours should it have taken us? 0.25 times 52,000, 13,000 hours. It should have taken us 13,000 hours, but it only took us 10,400. Ooh, that's good. Okay, standard cost, $12. That's our standard cost. Okay. Our efficiency variance is 31,200. Is it favorable or unfavorable? Well, it's favorable because we used a lot less hours. We actually used a lot less hours than what our standards was. So that's favorable. If you net these numbers out, if you take the 31,200 minus the 20,800, that is gonna give you that 10,400 favorable. When you where is that? When you add an unfavorable and when you take the difference between a favorable amount and an unfavorable amount, you just subtract them, and then the end amount will take the F or the U from the largest number. So 31,200 minus 20,800 would give you 10,400, and you're going to take this F because this amount is the larger of the two. So it's 10,400 favorable, and that explains this right here, direct labor. So now we know why we had a direct labor variance that was favorable by 10,400. And it's because we used a lot less hours than we thought we should have. We paid our workers more per hour, so that indicates we may have hired more experienced workers. That's why this is unfavorable. Our costs were a lot more than what we thought they should be. But it ended up being good for us because our more experienced workers, they worked a lot faster. They produced these crayons in 10,400 hours instead of 13,000 hours. So the net effect was actually favorable for us. See if there's anything else. Okay, and then this, so you could do it the way I worked it out, or you could set it up in these three columns again. Again, the cost variance and the efficiency variance, you'll get the same dollar amount that I did. So whichever makes the most sense for you. That completes this part of the lecture. I'm going to do one more problem where we're calculating variances for direct labor and direct materials.